All right, I'm going to give you one strategy for you to be right, be wrong, and be happy when it comes to investing. So many years ago, a good friend of mine, and he said, investing can be a very emotional business. I said, yeah, of course it can. I mean, you've got a lot on the line. And I said, but what do you mean? And he said, well, for example, I will lose money and I will be happy, and I will make money and I'll be upset. I say, what? How can that be? And he said, well, look, I will buy a stock for $10. I'll watch it go to 12. I'll sell. I'll make money. And then I'll look at it a week later and it'll be at 20 and I'll be upset. And say, okay, well, that makes sense. I guess it's the opposite on the downside. He said, yes. I buy the stock for 10. I watch it go down to 8. I sell. Then a week later, I look at it. It's $5 a share. I'm happy, but I still lost money. How is that? I say, man, I get it. I understand. And so here's what you do about it. Since you do not know whether or not your decision is going to be a right or wrong before you make it, the best thing that you can do is do half. So you can buy half. If you're buying into it, buy half a position. That way, if you're right about it, then at least you made some. If you're wrong about it, then you lost some. Same thing when it comes to selling. So when you're thinking you're going to sell, instead of going all in, selling 100% of your position, sell half. Now, of course, this has to work in with your money management strategy and how you're managing the capital, but that is a quick, easy way to be right, to be wrong, and to be happy. So now let's look at the market and where we are in the S&P 500, and then some of the other positions, what our plan is for this week. And here's a look at the S&P 500 for the week, and it was down 3.79%. It hurt. But here we are on the double bottom. This is the second leg down. It's a possible double bottom in an ABC correction. ABC correction would be like this: A down, B up, and C down. So we'll see if it holds. I do not know if it's going to hold here, but it wouldn't be surprising if it did. You can see it looks like investors got really scared here back at the beginning of 2018. Now here we are ending the year kind of like we just started the year. So we'll see if the S&P 500 holds here. Could be an ABC correction. If it doesn't, we do still want to look for some sort of buy signals if it does hold in this range pretty close to here. So with that, we'll be watching it closely and see what how the bulls and the bears turn out for this week. I think what's most interesting about where we are in the market right now is that we are getting a lot of sell signals on the longer term oscillators and indicators that we're looking at. Now, most of them don't close until the end of the month, and so we don't know if at the end of this week, which of course is the end of the month, if those signals will trigger or not. But we are close. So in the 12-month momentum, we're very close there. So basically the S&P 500 trigger would be if it closes below short-term treasuries. We are right there. We're so close. And then when we've got our other monthly momentum indicator, we had warning signals last month, and now we're getting, if they close lower than the close of last month, then we'll get a trigger to sell. So all of that is good news for the bears. For the bulls, it's not so good. And so the important thing to remember about these oscillators is that they will predict a bear market sometimes when there isn't a bear market. And so it's right 100% of the time, but it's really right 200% of the time or 150% of the time. And what I mean by that is, so we'll get out of the 6 signals that we'll get, maybe 4 of them will actually signal a bear market or would be actual bear market. So we don't know if they will signal this week or at the end of this week, at the end of the month. And if they do, it will be time to take extreme precaution though. Because the last thing that we want to do is be caught in a market where it's a relentless bear market where things are just going down and down and down and down. And the bad thing about that is that diversification tends not to do so well as a protector of assets when we're in a deflationary market. So I don't know if we're going there, but we are pretty close to signaling that. We're going to see at the end of this month, at the end, and then that being the end of this week, where we stand. So with that in the portfolio, we didn't have any buy signals this week. The only position that was up in the portfolio was the US dollar. So US dollar still looking pretty good. Other than that, there was just not a lot of safety in the market. So we've got our stops in. We're watching it closely. And only thing we're going to do this week is look to see if we can get any buy signals and see how the week closes. So with that, have a great week, and we'll talk to you next time.